So a big week it's been for Nigeria's banking sector. First and foremost, we had the beginning of highly anticipated reports filtered through. Overall impressions there, because this is the catalyst that the Nigerian markets was waiting for.
Absolutely, you're correct, Alicia. The release of the numbers by the banks have helped to lead to an appreciation in the market. We've seen some rally in the market over the last 2 days prior to yesterday that the market came down by 85 basis points. But if you look at it on a year-to-date basis, the market is back up by over 1%. And the performance of the Nigerian stock exchange also compares favorably to other frontier markets, which obviously is being led by the results that have been released by these banks.
Well, as I was saying earlier, Stanbic is the latest out with numbers, profit before tax up 30%. But here too, that not filtering through to top line growth. We had top line dipping 5%, and this seems to be an ongoing battle, getting that top line margin growth to come through for many of these banks. Just how much of a concern is it for you at this stage when it comes to Stanbic? And we're trying to get a very objective view here.
Absolutely. I think the two key challenges really. One is there's a challenge trying to grow the loan book as a result of the financial crisis that happened in 08 and 09. So a lot of banks are more cautious and conservative. Secondly, we've also seen a decline in the lending rates, so that interest rates that banks are charging have declined significantly. And obviously that's been translated into the top line performances of these banks.
We've got the bank declaring a dividend of the 0.39 naira per share, 11% above some forecasts that have been sitting there out there. We had the share price react positively yesterday. Are you expecting that trend to continue today?
Absolutely, I believe so. Some investors may actually be looking to take some profit in the market, so that we're a bit cautious on our bullish approach to those particular stocks that have released their numbers. But generally, we think that the dividend that has been paid is quite generous. The dividend yield is around 5% across the 4 banks that have released their numbers so far. And we think that that's a positive sign in the market.
Let's take a closer look at some of the others. Access Bank swinging to 2010 profit, and it's a registered profit, a pre-tax profit of 16.2 billion naira compared with a 3.5 billion naira loss in 2009. We had the bank also declaring a nice dividend there of 30 kobo per share. What's your view on Access, where Tier 2 corporates are actually the ones expected to drive loan growth moving forward, and so that providing some impetus for Access Kenya, where it has the Tier 2 segment as part of its target market?
I think Access has benefited from 2 things really. First of all is the ability to sell MPLs to AMCON. This is generally a positive development for the banks, and they've been able to sell quite a sizable portion of their MPLs to AMCON in the last quarter of last year. Secondly, there's been a lot of MPL recovery from the bank as well. So those 2 things really has helped to boost the bank's profitability for their 2010 financials.
Of course, we've seen some improvement in that NPL ratio. Of course, as at the 3rd quarter of last year, we had the cost-to-income ratio also improving, standing at 64% at that stage, better than its peer average of 71%. Is that status still being maintained?
I believe so. I think that's a good sign. Obviously, banks are being extremely cautious in terms of hiring new personnel, because obviously that materially increases overhead costs. So we're seeing a lot of caution by the likes of Access Banks and some other banks in the sector as well. And I believe that that trend should continue at least until we see some stability returning to the markets. Some
of the risk that comes with Access Bank seems to be the fact that it is involved in M&A talks to acquire one of the affected banks. Access Bank exposed to execution and integration risk, some saying. Just how much of that risk are you factoring in?
I think that there's always a risk of integration, especially when you're looking to acquire a big bank, a relatively big bank in Nigeria like Intercontinental, which Access is sort of looking to acquire. Obviously, we think that the integration process should take a few years to complete, but that should give them a significant upside in terms of increasing their retail outlets so that obviously they can have access to a larger client base across the country.
GTB has been a little bit more generous in its divvy payout, 75 kobo being released there and a bonus of 1 share for every 4 held. What did you make of that decision?
I think GTB is always, is always one of the good stocks for investors. Investors are always looking at GTB, and they take quite a decent exposure there because usually their financials and their results have a positive impact on the market. But I think generally that's a good sign for the markets. Obviously, GTB has a solid management team. We continue to put a buy recommendation on GTB, and we think that the numbers that have been released should also help to drive the performance of the market in the medium term.
Amongst the banks, Zenith Bank as well seeing a pre-tax profit rise of 43%. Of course, we are anticipating the AGM on the 14th of April, where Zenith Bank will be seeking shareholders' approval to divest of its non-banking subsidiaries. What's your view on the strategy being adopted here, where GT Bank is following the likes of Access, of Fidelity, Diamond Bank as well, and divesting from non-core assets?
I think what Zenith Bank is really looking to do is to focus on its core competence. I think aside from the pension fund custodian license that they have, which obviously they're allowed to keep as part of the international banking license structure, they're looking to divest from their asset management subsidiaries and as well as their mortgage and insurance subsidiaries, because obviously it doesn't add a lot to their bottom line, and they've taking a management decision that they would like to focus on where they can drive the growth of revenue the most. So I believe that's a positive development for Zenith Bank.
In addition, it's to apply for an international banking license as well, which has a higher minimum capital requirement than other categories. This is a bank that does boast strong asset quality. It's underpinned by earnings. Is it a step in the right direction that you see Zenith Bank taking, applying for that international license?
Yes, absolutely. I believe is a step in the right direction. If you look at their capital base, is well over 200 billion and well over the minimum requirement for an international banking license. So I don't expect they would have any challenge trying to meet the minimum capital requirement for that. And obviously, it would allow them focus their strategy on trying to grow internationally, which should increase their bottom line over the medium to long term.